video is going to be a breakdown and kind of a guide of the way I mark up my charts and what to understand from my markups. So yeah, firstly I go down to the 12 months or the 6 months time frame and make out a range in which the market is currently playing at. We'll mark out a range in which the market is currently playing out. Also, marking out the different points, major zones in which acts as a support or resistance. So as you can see, this is a major zone due to the fact that we have rejections of this particular zone. So we have a rejection of this zone here to 3, 4, 5. So we have 5 rejections of that zone. Now to mark up a second zone based on the 3 months time frame, which would be around this point, because we have strong rejections of this point too. So we have points here 1, 2, 3, 4, 5. We count this 6, 7. Then after marking out our zones, and as you can see on the 3 months time frame, we are bullish on the 3 months time frame. Then we go down to the monthly time frame, which also indicates bullishness, which also means we are forming higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. But then we haven't yet formed a new higher high, even as we have formed a higher low. So now this is a strategic point in which this pair, which is USD JPY, can decide to push down to the downside, therefore causing a change in trend, and then we can then proceed to the downside. So having this in mind, when we go down to the weekly time frame, since we have no other support or resistance zones within the 3 months and the monthly time frame, we'll go down to the weekly time frame. Now within this monthly range here, we can then draw our minor support and resistance zones within this here. So this is a point, a strong zone. So I have to change the color of that to indicate that it is a minor support and resistance zone. Then next, another zone which I can see here should be this. So this is another minor support and resistance zone. Basically, we have reactions of it at here 1, 2, 3, 4, and 5. So this is a strong minor support and resistance zone on the weekly time frame. Now we also have to notice the trend, which is this, and also be able to mark out that. So when we get a full break of this trend line, we are sure that um, we are then bearish on both the monthly and the 3 months time frame. Now proceeding down to the daily time frame, we go back to check for other zones which are yet to be marked out on the daily time frame before we can then proceed. Now, based on the daily time frame, we can see back to the monthly time frame, we can see a rejection of this our zone, which is here. So the market formed higher highs, or I can just say we came buying, broke this support and resistance zone. This resistance zone in this case retested it and kept pushing up. Then we reached our minor support and resistance and pulled back, broke it, pushed to the next level. Then before we again saw a massive drop down to this major support and resistance support zone. And after that, we then continued on the upside to the next zone, which is here. So down to the daily time frame. So based on this, we are aware that so basically here we've gotten a reaction of this major support and resistance zone, and we are already pulling back into the minor support zone, which means basically we are going to wait for a proper pull back into this zone. Then we wait for our confirmation. So the confirmations that I use are the reversal patterns, which is double top, double bottoms, head and shoulders, reverse head and shoulders, and I also use candlestick patterns, that's reversal candlestick patterns like bullish engulfing, doji star, and some other reversal candlestick patterns. So once we pull back into this point, we then wait to see what the market tells us. If we are going to see a reversal pattern for the bullish, which is going to be double bottom, or bullish engulfing patterns, candlestick patterns, or we break this zone level and then wait for a retest of this before we can then proceed to push down to the downside, push down to the downside. Now a break of this zone basically indicates that we are ready. Okay, not yet. So a break of this second zone indicates that we are ready to push down to the downside, which means a break of this trend structure, which is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then we had a rejection of here, which is going to indicate a pullback down to this point. So right now we would have patience and wait to see what the market is going to tell us concerning this. If we are going to reject off here and keep on pushing to the upside, or break it, then wait for a retest and then continue pushing to the downside. Now also in this scenario where, for instance, we pulled into this point and then pushed back up into this major support and resistance zone. Now we are still on the daily time frame. At this point, if I wanted to take this trade, you can see this as a reversal pattern showing double top, which is this. Now this will be our neckline, which it pulled back into and then started moving, pushing down to the downside. So yeah, when you see me draw things like this basically indicates the double top, which is this. This is the neckline. So yeah, so when I draw things like this, this is a double top, then this will be our neckline, which will then pulled into, then expect the reversals from that neckline. Then an inverse of this is a double bottom, which is basically the inverse of what I just drew here, which is this, then a break of that, a pull back into the neckline, and then continuation to the upside. Then for the head and shoulders, we have the left shoulder, the head, and then the right shoulder, something like this. Then we break it, then this then becomes the neckline, which we expect to pull back into, then before we can then sell to the downside. And a reverse of this which is a reverse head and shoulder, which is this, the head, then the right shoulder, which will be broken, and this becomes neckline, which we expect a pullback into, and then a push to the upside. So this would basically be most of the things that you'll be seeing in my channels during my analysis and breakdowns. So I think you should study your reversal patterns and also your candlestick patterns to be able to know when to a trade is ready to be taken. And also you can also study your trend lines, and in the future I'll be making videos on how to draw perfect trend lines, how to draw perfect support and resistance zones, and also a more breakdown on the reversal patterns and also reversal candlesticks. So yeah, thank you for staying with me to the end of this video. Bye bye.